head into a new decade, the market is already taking shape and new investment themes and trends are starting to take shape as well. Here to discuss that is Dave Mazza, head of product at Direxion Investments. The firm manages 93 ETFs with $15 billion in assets. Dave, welcome to the show. Great to have you.
Thanks for having me here today.
Okay, let's start by discussing stocks from international and emerging markets. Both have underperformed U.S. stocks on a relative basis over the past few years. But that dynamic could be changing because emerging markets, as of late, are starting to make some noise. Direxion offers a few ways to play the resurgence in emerging markets. There's 3x bullish trades like ticker symbol EDC. There's relative weight trades like ticker RWED. And there's single country 3x bull trades on Brazil, Russia, and China. What trends do you see in emerging markets?
Well, you raise a really great point. Is over the past few years, the U.S. has really been the place to be. So for investors who have had a home country bias, which many do, they've really been rewarded as such, as the U.S. economy and especially U.S. earnings growth have been superior to nearly any market around the globe. But what's interesting is if we peel back the onion a bit on some of the trends in the market, we actually begin to see emerging markets finally having the potential and the catalyst for some outperformance. A big part of that is the decrease in uncertainty that was weighing on emerging markets from the trade war between China and the U.S., which at least from a phase one perspective has moved into some resolution. But even outside of that, economic growth has been a bit lackluster outside of the U.S. and in emerging markets, especially in China. And we are beginning to see some signs if we look at economic surprises, if we look at just the robustness of data that is coming from emerging nations. It's a bit better. And that's hopeful because, of course, the valuation side has been there. So at Direxion, to your point, we offer a multitude of different solutions for investors looking to access emerging markets, whether it's not tactical traders taking advantage of our leverage and inverse products, or investors with a more intermediate horizon looking at an ETF like RWED, which actually overweights emerging markets relative to developed markets.
Okay, so changing gears, let's talk about commodities. Any weakness in the U.S. dollar would be a much welcome boost for commodities. We've already seen a nice rebound in certain segments of the commodities market, like precious metals. The Direxion Auspice Broad Commodity Strategy ETF, ticker symbol COM, offers a convenient way to get commodities exposure without having to buy a farm. Can you tell us a little bit more about that?
Yeah, so what's interesting is another area like emerging markets that has been out of favor for some time is commodities. Commodities, of course, went through a major super cycle, really fueled by emerging markets in China, which had come off over the last decade. But what we're beginning to see again is some signs of stabilization in commodities market at large. But our ETF, COM, actually takes a little bit of a different view when it comes to commodities exposure. Where it's not just a long-only type strategy, it's a long-flat type strategy. So at an individual commodity level, we will actually only introduce exposure to that particular commodity if it is having a favorable momentum and favorable trend. And because of that, our fund is more adaptive in many of the offerings on the market and not just reliant on having a beta to commodities, but more focused what's actually happening because we know the trends in precious metals can be very different than industrial metals, for example. So COM will give you more adaptive exposure to commodities, but can still be used as a core holding relative to equities and fixed income to help diversify the portfolio.
So next up are the Portfolio Plus ETFs, which are a great choice for investors who are bullish on stocks, but may not necessarily want to go all out with an ETF that has 200% or 300% daily leverage. They're also a great alternative to brokerage margin accounts. How have investors been using the Portfolio Plus ETFs?
Yeah, the Portfolio Plus ETFs are really some of the most unique offerings in the ETF market because they're really intended for long-term strategic allocations. And really what they're doing is providing a small amount of leverage. So not 2x or 3x to your point, just 1.35 times the exposure of the S&P 500 in the case of PPLC, where for an investor with a long-term horizon, you can get a little bit extra market exposure, which can be beneficial to you over that period. And so the people who are focused more on tactical trading likely should think about the opportunity set that can come with a 2 times or 3 times exposure. But for a long-term horizon, we offer Portfolio Plus ETFs in large cap, mid cap, and small cap, and then in developed and emerging markets. So equity investors can benefit from having a little bit more allocation in their portfolios over the long run.
If you're just joining us, we're talking investment strategies with Dave Mazza at Direxion. Go to direxioninvestments.com to learn more about strategic and thematic ETF investing. In 2018, the S&P 500 index underwent a major change with the addition of a new industry group called the communication services sector. Direxion offers a bull and bear 3x ETF on the communication services sector. TAWK, bulls, and MUTE, bears. Why is this an exciting area for investors?
To your point, one of the biggest changes that has occurred from a sector perspective in the markets, really in recent history, is the introduction of the communication services sector. Because what GICS, which stands for Global Industry Classification Standards, which is maintained by index providers S&P and MSCI, did is they made a sector which historically was a bit stodgy, telecommunications, and combined it with other sectors and other companies in other sectors to make communication services a growth-oriented sector and one that can provide investors and traders with an interesting opportunity set when it comes to accessing really some of the hottest areas of the market. When we think about those companies, we tend to think about them as just being in the tech sector, but actually you can find them in an area like communication services. So we are seeing increased interest in that particular area in the market, with TAWK and MUTE gaining increasing trading volume with investors.
Let's talk about falling stock prices, because when stocks tumble like they did in the final part of 2018, people do not have to make sell all or sell nothing decisions with their investments. One strategy is to keep the portfolio fully intact and to simply add insurance protection with inverse ETFs. So what are the advantages of hedging a long only or a buy and hold portfolio with inverse ETFs?
Yeah, it's a really interesting point. I think one of the biggest challenges that investors face from a behavioral standpoint is dealing with volatility, and not just volatility in the traditional sense of standard deviation, but really on the downside. And we tend to behave at our worst when we're seeing the market values of our portfolios decline. And an option that investors can look at, relative to a multitude of others, is using inverse ETFs. And in particular, I'm thinking about just a 1x inverse of a particular index to be used as an insurance policy, as a hedge. And what that does is it introduces a part of your equity allocation, which is, of course, going to behave in an opposite way than what you would have with just a long-only allocation. So using these products, traders still need to be aware of the need to pay attention to them because of the potential for negative compounding, but they can be a really powerful tool in an easier way than investors may find with using options or other types of alternatives that may be more expensive or more complicated. So funds like SPDN can be beneficial for traders and investors to use alongside their more traditional allocations in times of market stress.
One final question before you take off. Looking ahead to this year, what are some of the other major trends you're watching for as the year unfolds?
Well, of course, this year is going to be all about the election here in the U.S. But with that being said, there's always headline risks out there. So just like last year, headlines were dominated, of course, by the negatives from a geopolitical standpoint, the potential for a hard Brexit, the potential for a worst case scenario with the China and U.S. trade war and eventual deal. But we advocate investors keeping a cool head, keeping an eye out for opportunities that can arise, because, as I said, headlines always exist. They really just change. If we focus on the fundamentals that are in place in the markets, especially supportive global central banks, we continue to think that there's more opportunities for investors than there are challenges.
All right, well, Dave, we really appreciate you taking the time to join us and sharing those wonderful tips and insights. Go to directioninvestments.com to learn more about strategic and thematic ETF investing. I'm Lynn Dolan with ETFguide. Thanks for watching.